All right, everyone, welcome back to the Bear Market Update. And today we're going to be jumping into not only some strategies for digital asset investing, but we'll also take a look a little bit at the pre-research for the market. And of course, we'll take a look at some altcoins and a handful of strategies around some of these digital assets. It should be a good one. I want to kind of give some of you guys an update on this because the Bear Market Update, this is the show that I do specifically for our Diamond Circle and or our member groups. So if you are catching this on YouTube, sometimes we'll put up one, and I think we're going to do this with this one today, where it is not a member-based video, but it does go out to the members first before it hits YouTube. But most of the time, these videos are specifically for our member groups. Of course, we'll make it available, here today. I want to go into one of the things that are been asked to me quite a bit, and that is always, hey, Paul, I don't have a lot of money to go into digital assets. Maybe it is they only have carved out so much, from a standpoint of their total liquidity or their total net worth, and they're saying, hey, I only want to put in 2% of what I'm looking at on my investments. Or maybe it's someone that is first getting started in investing in digital assets, and this is their beginning process. So one of the things I did was really just design a very simple format for this. And one, of course, is wealth building with little to no money on digital assets. One of the things that I think a lot of people miss is the micro investment side of it. And micro investments, I think a lot of people now are already doing that, but essentially what you're doing is you don't require a lot of upfront capital. You don't need 100, 500, 1,000, 10,000 to get started. I mean, you can go out with 50 bucks and start your own digital asset portfolio. And it's fairly simple to do. What I would recommend is take a look at some of the self-custody wallets that have the ability to onboard either through like a Coinbase and Coinbase wallet, or even through Tangent. In some cases, there's ways to be able to do that. Even if you have to set up an account on Coinbase, which I would recommend anyway, or Kraken, to be able to just connect to your bank so you can start to move there. But I would just put in US dollars, convert that to USDC, and then move that to a wallet and start your trading over there. But micro investments, very easy to do. All that simply means is you can start with literally 10 bucks. So, and that's something that, even myself, I'm training a lot of young entrepreneurs on how to get into digital asset investing. Some of them, of course, are, have zero base. Some of them have, hundreds of thousands of dollars. So it really depends on where you are in your own life cycle. But micro investments, very easy to do. Just start with investing a small amount. Pick the tokens. There are some areas that, of course, I look at, the AI tokens. I also take a look at DPINs. And we'll show that on today's many of the projects that I would take a look at. The other thing, of course, you want to get into is portfolio diversity. And portfolio diversity is one that I think a lot of people mess up on. And the reason for that is simple. Typically, people will get on an altcoin, and let's say Solana or even Ethereum to a certain extent, and it's doubled in price in the last year. And under most pretenses, an investment that has doubled in a year, many people would say, okay, that's a win. That's an absolute win. I'm just going to camp everything out in that one token. The challenge is that you miss those opportunities that have the ability to go parabolic. And what I mean by parabolic is 10x, 50x, 100x. That's right. Those are possible in a bull run, and we are entering, I think, that phase. So DeFi is one of the best ways to do that, whether you do that within the ETH ecosystem through something like a Uniswap, within the Phantom and Solana ecosystem with a Phantom app, which is their, I won't say it's Solana's app, but it's the app that gives you the gateway to Solana's DeFi system. Jupiter, of course, Jupiter Exchange being one of those that you can utilize to be able to go that. If you're interested in Tron, that network has a really good wallet. Sui has a really good ecosystem that is starting to build. So those are the ones that I would go with. And then, of course, look at building out within one or two of those in a portfolio diversity. And the reason it's important to go in separate chains, it doesn't mean like get in Solana and buy a bunch of meme coins. That's a diversified asset. No. What that means is let's go with some in Solana, maybe some within Uniswap. That's going to be an ETH-based system. So you can look at different projects within those and diversify accordingly based on, the research that you've done and possibly the kind of projects that you might be interested in. Some people are interested in gaming. Some people are interested in DePIN. Some people are interested in just DeFi and earning yield. So that's one area that you can kind of go into. The other one, of course, is dollar cost averaging. And I think this one is so simple and probably so well known. But there are things that people forget about dollar cost averaging. This is what I'm talking about. Dollar cost averaging is taking a small amount of your weekly income or whatever it might be, your allocation if you are working off investments, your allocation, and putting that toward a specific digital asset. Now, where dollar cost averaging changes is as you're building out your asset. Let's say, for instance, that you were dollar cost averaging into Solana over the last year. And just to give an example, we'll go over to the Solana chart just to kind of give you some ideas of what that might look like. And we'll go out to the weekly. Let's squeeze this down a little bit and jump out here. So if you were dollar cost averaging in the last year, so let's say it was September of last year, okay? We'll get our growth. So you were in September of last year. You have done 680% in growth. Now, you could be and could have stayed within Solana just by dollar cost averaging. Or you could have seen this move right here where you saw a little bit of sideways action. So I probably would have looked at Solana at this point, because remember, I'm trying to build a portfolio that is in the beginning stages. So it's not about necessarily long-term holding. Now, what I would do is probably take my profits, some of my profits, say 50% of my profits, that amount right there, which was 690%, then I'd start to move to an alternate platform. Let's say, for instance, Sui. So let's go down and take a look at Sui right here, and we'll do the same thing. Now at that same time, and remember in Solana, I was moving out around April of this year. So I'm looking at Sui, it's doing a complete nosedive right there. So is this the time to dollar cost average? Probably not, as you start to see these big moves on the weekly. But what happens right here, Sui starts going sideways. So this would have been a potential for a dollar cost averaging of those profits into Sui. So taking small amounts of profits from one project and moving it into another project that starts to accelerate. So that's one of the things I think a lot of people miss in dollar cost averaging as a whole, because sometimes it's kind of the set it and forget it mentality. Nothing necessarily wrong with that, but it will grow at a smaller rate, meaning, there's only going to be so much growth in these over a period of time, but there are all sorts of diversified assets in DeFi that may have a similar or even better run up. So that's why you want to keep your head on straight around not only what we're talking about on PBN, the main channel, but also just understanding in general what's going on within those projects. So that's one thing to go. Hopefully that's given you a little bit of a tip. I want to get into the news today and kind of cut in on a couple of points here. As you guys know, I usually film this here from my home studio before I go in and cut PBN, which is our primary channel. If you guys don't know that, then it's Paul Barron Network. Over on YouTube, you'll find us over there. We're about to hit 500K. And this channel is specifically for our members. So our members audience is very small. I won't say it's small. We're closing in on almost 300,000 members, but only a handful of people get access to these videos. It's very rare that we put out one that it doesn't just be pinpointed to hitting our members. But Fed Pivot is here. I think the big thing right now everybody's asking is how quick. I had Mark Moss on the main channel the other day. I think it was yesterday. And he was talking about the idea of the accelerated pivot. And what he simply meant by that is that the Fed is most likely going to accelerate into lowering the cost of money. The reason, of course, is that four-year cycle that's happening not only within business, but also within interest rates. And they need it to happen because we are talking about a $30 trillion deficit that's going to continue to work its way up to around $40 trillion. So the lower cost interest that we can get, $2 trillion a month, I think right now is what we're slamming in. So that's one thing to just be aware of. I think they're going to accelerate into 2025, which is simply going to mean we're going to have some opportunities going into the next phase. The other thing I want to hit on is Kamala Harris's tax plan. And this gets a little crazy, but if you're not voting, guys, and I know I hate to say this, but if you're not voting for Trump and you're in the crypto area or any kind of business or any investing area, you need to watch what I'm about to talk about. And this is the Harris tax plan ideas and their breakdown. And mainly what it boils down to, and this is the kind of the headline, the top line preliminary estimates, we're talking about 1.7 trillion in 10 years of revenue based in this plan. The potential for less GDP in the long run, GDP down 2%, the long run wages down 1.2%, and long run full-time employment jobs is potentially losing around 800,000. That's huge compared to what we're in right now. That would be a scenario where it would put the United States out of the lead in the Western, countries in terms of growth. So there's several things you can kind of take a look at right here. There's various tax credits that take into account, but mainly it's going to be raising a 1.7 trillion over the next 10 years. And everybody thinks this is coming from the rich, okay? It is not. It's going to be coming from everyone. And I think it's actually more harmful to the average person than it is to the people that have the ability to kind of move outside this tax system. Businesses have the ability to move outside the United States. Billionaires have the ability, millionaires have the ability to move outside the tax system and say, it's just not working for us anymore. But right now, tax credits and other carve-outs right now will complicate the tax code, run more spending through the IRS, and together with various price controls will fail to improve affordability challenges in housing and other sectors. That's one of the big factors I think a lot of people are missing. And also they estimate right now the net effect that I want to get at here. Yeah, here we go. Net effect in the policies about 1.5 trillion over the next decade. There are going to be some variations there, but in including economic impacts of tax increases, the net effect could increase deficits by roughly 2.6 trillion over the next decade. I'll explain how that works. But right there, you're looking at the long run effects that I just kind of talked about. The problem is that you've got not only gross domestic product, that's just all business down 2%. Then you have national product, manufacturing down 1%, 1.8. Capital stock would go down because of the capital gains requirements. Wage rate would dive, and then full-time equivalent jobs is going to be dropping as well. So you can see this is pretty significant. The increased top individual tax rate, though, this is one that I thought was interesting. 39.6% on income above 400 for single, and 450 for joint. So think about that for a second. If you're two professionals, you might be making those kind of numbers, but you're going to be hit, of course. This is going to circulate down an increase. Now, that's a 39.6% tax increase from what we've seen in the past, around 35. So already up. Most likely that will happen across the way. Tax long-term capital gains, this would be 28% as opposed to 39 for taxable income over $1 million, and unrealized capital gains at death above $5 million. So any kind of situation where you might have money coming into your family, then that's going to be hit as well. They're going to limit retirement account contribution to high-income taxpayers, so that's going to disappear from IRA. They're going to tighten the rules on estate tax, and they're also going to do this carried interest as ordinary income for people earning more than 400. They're going to do in-kind exchanges of 500,000 in gains. Major tax provisions also. This is tax credits mostly to and for child tax credit, which I think is a good thing, but that could easily be brought back in without the element of destroying business in the United States. And of course, that's going to destroy, I think, the component of jobs and further. But raising the top individual tax rate, 39, this is kind of a rundown, 39.6 right there, earning 400, and the 450 joint. Unrealized capital gains, we're talking about, these are kind of the impacts on GDP, GNP, capital stock, wages, and follow. So you can see all of the negative numbers here. Even though this is going to be raising money, the question is, you're going to be giving $1.7 trillion to the U.S. government to do something with that it's supposed to better your life. Tell me what that might be. Can you look at anything that the U.S. government has done for you in just the last 5 years and giving you something that would be beneficial. So this is the tax plan that most likely will break not only America, I think it breaks a lot of the Western countries, because this will start to shift businesses and jobs into other major sectors of the world. So definitely a big one. So let's talk about at least the positive. And I think one of the things about the positives is going to be altcoin season. Is it ready and is it here? A lot of people have been looking at this. I think we are in a position right now where altcoin season has begun. We're starting to see a lot of movement here. This is kind of the breakout mode that we've been looking at for quite some time. Everybody's been tracking this as you're getting into the scenarios around what we would see of where most of the crypto market is, except Bitcoin and Ethereum. And that is something that when you look at the total three, let me see if I can pull that up real quick. All right, so let's look at that total three right here. You can kind of see what I'm talking about, this range bound that we've been targeting for quite some time. This is coming off of back in April of this year, where we saw that run up, of course, with, yes, Bitcoin, but you'll see that's where the initial, then this dive right here. So really what we've kind of bounced off of it here back in June. We bounced again here in July. We got close to bouncing through in August, never. And now we finally got in a position on the weekly where we have closed above this range. So this in itself is a pretty significant opportunity. Now, what are going to be the ones that will win on this? I think everybody's asking that, and we'll talk about some of those tokens today. Solana market cap now can reach 50% of the Ethereum market cap. This would be insane if you had a market cap of the kind of levels that we're talking about here. That would essentially put Solana's advantage over Ethereum, including processing 3,000% more transactions. I think that's the big one. But right now, VanEck, these guys are pointing at Solana as being, now you have to remember, VanEck is one of those companies that is very pro Solana, so they are going to talk about this quite a bit, and I think they are going to focus on this. You know, it's not that they're anti Ethereum, it's just that they are very, very into, they're the ones that are going to be bringing a Solana ETF, I think, to the stage. BlackRock also saw the most amount of inflows yesterday, almost 100 million coming in on net inflows. This is the highest inflow in over a month within that. And let me just kind of zoom in on that. You guys can kind of see it right there. Highest inflows in over a month. The other thing that's playing into this has been, I think one of those things that a lot of people forget is the resistance around this 64 to 65K zone for Bitcoin. We are in that zone right now. It will not take much to get into this golden pocket and start to move back up to a potential all-time high. And I think that's where we are right now in terms of where Bitcoin is going to be going. You look at that and you kind of consider a couple of things that the market is facing right now. Many people would say, okay, well, Paul, the 50 basis has now got us out of the recessionary cycle. I don't necessarily agree with that. I think we still are in a recessionary cycle, not necessarily in what we call core cost inflation, but when you get into the rest of the business elements, and I'm talking about banks now reducing rates, which you guys have probably already seen, your yield rates coming in on your money market funds or even on your USDC starting to drop. Robinhood went down under 5. I think Fidelity is now going under 5. So I think this is going to be an impact that a lot of people will start to see not only hit, and it's going to open up the opportunity for that money, that liquidity to start to make its way into, I think, DeFi and into the altcoin market, which is where you'll start to see those kind of runs. Bitcoin will do well. Mark Moss and I were talking about this yesterday. He was basically saying, listen, if Kamala wins, it's 100,000 Bitcoin. If Trump wins, it could go as high as 400K next year. That's the kind of accumulation potential we have going forward. The other thing that's happening right now, this I thought was absolutely amazing. Visa created a platform to basically help banks in issuing fiat-backed tokens. man, now the banks are going to be able to issue this. Here's the one problem I see with this, and it's the likelihood that banks will have to hold a one-to-one reserve because they don't hold a one-to-one reserve now versus something like, let's say, a USDC has to hold a one-to-one reserve. Bank, as you guys know, banks do not have that. In fact, they're about a 10-to-1 reserve, if that, in most cases. And I think that's going to be a problem. I think most people are kind of savvy to this right now, but there's a lot of people that are in, existing bank systems right now that don't even, listen, there's a lot of people out there who got 0% on their savings for years and years and years. They weren't doing anything with it. That's how much domination the bank has over the minds of these markets. Now, with that being said, guess what's happening? Warren Buffett just dumped another almost $1 billion of, guess whose stock? Bank of America. That's right. Bank of America is now off the table with Warren Buffett, or more of it off the table. The insider confidence signal right now is super negative, which is not good. Average sector, as you can see, is quite a bit different there when you look at banking in general. What does this tell me? This tells me that banks are starting to feel the pressure. Lowering interest rate is going to mean that there is going to be liquidity coming out of these regional banks and looking for assets. And those assets are either going to be securities, gold, or digital. Those are the three. That's it. Three digital assets, or three potential classes of potential investments are in there. So that's where I think we're going to be going. Let's take a quick look at the charts real quick. Bitcoin, of course, holding a green day right now at 63.6. A lot of movement here on the week. I want to go to the daily on these just to give you guys a little bit tighter look. Again, this is our MSI 2.0 indicator. You guys can get this if you are a member. It gives you our sentiment metrics, which right now is pointing up for Bitcoin, which is good. We are in a particular order block right now that if we break through this right here around this 65K mark, which we've gotten in close a couple of times, I think this is the zone for movement on Bitcoin. If you take a look at ETH, having a really nice week right here coming up, and again, very positive on sentiment. Money flow is still coming in right here, as you can see. And of course, the Solana now flying over the 150 mark easily. And in a position right now, I think, to really take off. Solana could get a bump here because we are entering a new order zone. Money flow is coming back in, and sentiment right here, as you guys can see in the lower right, in this area right here. That is our sentiment metrics that you can get access to. I don't know if a lot of people know that, but this area right here is our little sentiment metric box that comes in on top of all of these charts. Here's Avalanche starting to also move, had a reverse day. Some people are looking at this as a potential precursor for a really barn burner move on Avalanche, mainly because of what could happen at their event, which is coming up in about 3 weeks. So just be aware that is on the move. Ones I want to talk about. Let's talk about that. Let's go into Say, which has had 2 pretty outstanding days on that, and there's been a few points of that, but money flow is starting support here. I like this one. This is one that's interesting. If you kind of stretch out on Say, it's, if you really go out on this, you can kind of see this token might be in for a position around 58, which would be a nice little move. Other ones that I like that are a bit on the move, I think Hedera has been one that I wanted to hit on. Audius Note Veracity is holding, and there's a couple more. We are going to take a look at Sui as well, but darn, I thought we had one. Mythos is on the rise right now, and what else did we have? Yeah, Over Mobile. These are all my watches right now, just so you can see them on screen. Akash, I think this one is going to be in the potential right here. Also Aptos, another one that I'm looking at, because this one could open up a little bit. It's still showing a little bit of weakness right now, but it is going somewhat sideways, and I think that's the question mark there on where Aptos might look like it's going to go. Would you stop? Let's get that in there and escape out of that. That's where I think Aptos could have a chance to go back up here to around this point right here. So we'll see. A couple of points there on that. Drift Protocol, Aave, of course, had a really great week and continues to skyrocket. This is one that a lot of people have said, is Aave over? Well, go back here to where Aave in the last bull run was. Look at the kind of opportunity here. From basically a 5x opportunity. That's if it only does what it's did in the last bull run. Render a little bit flat on the sideways, but remember, a lot of Render users got Render in 2023 or possibly even back in February of 24. We saw that big run. But if you were with us, this is the area we were buying. And that, of course, was September of 2023 last year. So a great run. And many people exited up here, but a lot of people have started to move back into Render after it kind of hit these lows right here on 470. I still like this one, and I do like it because right now it is on the green in terms of overall sentiment. So be on the lookout for all those. Listen, we're going to be doing more of these market update videos over here on this secondary channel, but typically this is only available to our members. So if you're not in the Diamond Circle, make sure and get in on that. It's very easy to do, and of course, the thing to watch for, and I think a lot of people may not be aware of, is that when you're over on our website, it's very simple to jump into the Diamond Circle. Let me bring this up on screen for you guys. You can get in quickly by just going over to memberships right there. And that's going to bring you into a section where you can join the free one. Very simple. You can get into Pro and get the MSI 2.0 indicator, the one that we've been using here. You get into Mastermind and you get all my portfolio of videos, which is where I break down all of my holdings. And I also publish that out to the Mastermind. That's probably the biggest advantage of being in there, other than I do and we'll give trade alerts in the Mastermind in our private community over there. So make sure and get in on all of that. You guys cannot miss it. If you haven't seen the MSI, it's a great tool that I think a lot of people don't really understand what it is, but it basically gives you an overlay on the TradingView platform to track sentiment as well as trailing stops. It has a MACD and a squeeze momentum in it. I mean, so if you're an advanced trader, it's got tools for you. But right there is, of course, the Barron Market Update. That's what you're listening and watching right now. We'll catch you guys soon. So get out there and make some money.